Okay, everyone, thank you for joining me tonight. As I was saying earlier, I will be recording today's session. So if you have any questions, just feel free to shoot me an email over there. My email address is right up there on the screen. It's Toni@tradingfrommainstreet.com. And I'll be happy to answer any questions that you guys might have. I will be focusing on a lot of different markets today. I trade stocks, futures, and Forex the most myself, so that's where all of today's things will be coming from. All of the charts and the trades that you're going to see in today's session are those that I've followed either with a client live as it was setting up, or took the trade myself. So they are all live trade actions, so you will get to see a real market timing here. Let's begin. In this class, we're going to be covering a number of different things. Like I said, it's going to be an intermediate class, but if you are a new trader, there's going to be a lot of things that you're going to be able to pick up as well. We are focusing today upon market timing. So we are going to be looking at using Fibonacci for timing a lot of different periods on the market. We're going to be using beginner to advanced trade management techniques for Fibonacci, and getting into some of the more advanced stuff as we go along. So we're also going to look at how to combine several Fibonacci indicators for ideal entry timing, as well as techniques for timing the perfect targets. And of course, we're going to be identifying imminent pivot levels in the market. So the first thing that I want to show you guys today, this is a trade that was setting up as I was working with a client last week. Let's see, it was on Friday, and we were talking about different types of trade strategies, and I brought up the momentum reversal as one that I wanted this particular person to focus on because it's one of the easiest types of strategies to learn. It's one that works incredibly well for beginner traders, and this is why I said even if you are a beginner trader, do not worry, you're still going to learn a lot from today's session. And I will take things pretty slow and try to cover all of the details really well. It's just that for some people, this takes a little bit of time to really get used to doing. One of the things that I tell my clients that I'm working with is that it's really important not just to sit in on a class like this, but also to go and try to find the things that you are seeing in the class on your own and try to follow them, from beginning to end. If you find something after the fact, like let's say you didn't see a trade until after it was already complete, you can scroll back and watch bar by bar as that trade unfolds. And it's a really great tool to get the feel of the market and how the market flows. Now, I, of course, had the advantage of doing that for over 15 years live in a trading room. So I had to, kind of trial by fire there for many, many years. But individual traders, they don't always take the time to do that. And it's a really important thing to do. So with this chart that I have up, we just have the Euro USD, and this is something I originally was showing her. I had my scanning screen up, and one of the charts was a 30-second of the Euro US dollar. And so I was starting to see this congestion that was happening up here on that 30-second time frame. So I dropped down and showed her this on a 10-tick chart. And the advantage of this was, even though it was a little bit fast to try to take as a trade, it really gave us the chance to walk through how a trade unfolds in real time, just kind of in a compressed time frame. So I want to show you guys this as the first example today, just because it is something that I walked through with her from beginning to end, and to show you how we can use Fibonacci on these trades. And then we're going to look at pretty much this exact same strategy as it unfolded in a trade that I had today, as well as one that I showed you guys last week. It was another trade I had last week. So we're going to see all kinds of actual trade examples here and things that you guys were able to follow along with me live, because I think it's really, really important that when you're learning from a mentor, you know that the mentor can do what they are talking about live and in person, and we're not just relying upon after the fact data. So you'll see that, time and time again, all of my classes incorporate strategies that have happened over the years, looking at trades that I took several years ago, as well as those that have the exact same strategy and type of analysis today, so that you can understand that the tools and techniques that I'm teaching you guys are ones that are truly timeless. I mean, you guys can learn these strategies today and they are going to continue to work for years to come. And I really have never seen a period in the market where they haven't worked in over 20 years. And you know that we've had so many different types of markets over that time, and also many different types of markets. Even the Bitcoin follows these tools. So this strategy that I'm going to show you here first is one that is called a momentum reversal. Now, we didn't quite catch the original entry on this momentum reversal when we pulled it up. It was moving very, very fast. But the trigger for the original trade would have been where you are looking for basically an upswing with a little bit of a pause in it. Sometimes this pause is about half of what you're seeing here. And then you're looking for 1, 2, 3 evenly spaced highs within a parallelogram. So the typical trigger on this is going to be a channel break coming off of that third high, stop above the high for that third high. Now, in this case, we didn't catch it until it was over here. So this was a little bit of a variation of the continuation on the trade. Sometimes you'll see it pull up only about halfway. It'll just go like this, couple 2 waves, and then continue. This one pulled up a little bit further than usual, but still with the spirit of the trade. So we follow that. And I want to show you guys how we can use Fibonacci to help identify not only entry levels on trades, but also target levels on trade. So the first thing that I'm going to show you guys is the continuation of this trade. So for the continuation of this trade, if you miss a momentum reversal when it first triggers, the initial continuation strategy is one that is called an avalanche. And it's called an avalanche because it's basically that first continuation coming off of a peak. So you kind of get this buildup, this ledge here that takes place. And that leads to a really solid breakdown when that ledge gives way. Now, with it, it's really common to see a 2-wave correction before you get the continuation. And this is where Fibonacci starts to come into play. So with Fibonacci, there's a number of different types of Fibonacci tools out there. And I'm going to show you guys 3 specific types of Fibonacci tools that I use most often. So the first one is the Fibonacci retracement. Now, this is a tool that most of the traders that are first introduced to Fibonacci will first learn about, because it's probably the most widely used of the Fibonacci tools. Basically, a Fibonacci retracement is a tool where you are adding Fibonacci to a trend move and looking at periods of support and resistance based upon how that trend retraces and pulls back. So for drawing the Fibonacci retracement, you're looking at an initial impulse move in the market. Now, an impulse move is when you have a major trend move. So we know, for example, that this is an impulse move because it's really comparable to some of the other large magnitude moves that are taking place on this particular time frame. So when we're drawing that Fibonacci retracement, we are going from the high of that trend move to the low of that impulse move. I'll show you guys here on a chart so you guys can see what that actually would look like to add it to it. So let's look example here today. I'll show you guys on the 5-minute. So if you're using TradeStation, you're looking at this tool up here, and we'll use this move here, which I'm going to show you guys here a little bit later. This is a trade that I took towards the end of the day. And basically you're going from the high of the move to the low of the move. So this is the retracement that we're looking at. And what we'll see here a little bit later on is this retraced to the 50% level, paused there, almost made it to the 61.8. And here we're starting to see momentum shifting again. So we'll be looking at that action here a little bit later on, but let's go back to that trade from Friday. So on this one, when we're looking at entering into a new position or building into a position, you can use these Fibonacci retracement levels to help you with your timing. So ideally, you're going to see continuation strategies that are going to take place and trigger coming off of these retracement levels. Now, a lot of times it might be a two-wave move like this, where it's only coming up to the 38.2% Fibonacci retracement. And I'm not going to get into too much how these Fibonacci levels are determined. I do have some free videos on my website, tonihansen.com, that gets into some of the background regarding Fibonacci and how it's applied to the markets. So that's some of the beginner stuff that you can go back and learn about. And what we're going to be looking at is kind of getting into more of the details of actually using it tonight, since we're kind of limited on time here tonight. So when we're looking at continuation strategies and things like breakdowns, bear flags, this would be like an avalanche, for example, things that react off of these Fibonacci levels tend to have more secure follow through, meaning you're less likely to take a false entry on a trade. Your timing on the trade is more likely to be correct. So if you take something that might not be quite hitting one of these Fibonacci retracement levels, like for example here, then you run into the risk that that retracement simply isn't done yet, that it might come up a little bit more, might give you another flush. And so this is why using these retracement levels can help you avoid some of the more risky setups. And that's particularly useful for newer traders that are trying to develop confidence in their trading system. There's a lot of other reasons, of course, that this level here is holding its resistance based upon this channel break here, where this is breaking down. So we're seeing a lot of resistance with the congestion over here as well. So it's usually not just one thing or the other. We also have another type of resistance that's hitting at the same time. And we'll get into this in a minute using Fibonacci extension levels, which is another type of Fibonacci tool. Basically, you're looking at things like measured moves. So not to jump ahead too far right there, but that's another thing that we look at regarding types of Fibonacci. So this had that continuation here that triggered right around 1433. And let's skip over here and show you another type of Fibonacci tool that can help with timing these retracements. So Fibonacci's work really, really well when you're looking at trading continuation type of strategies. We'll get into some of the pivot trades also. Obviously, a pivot trade is still taking place here. It's just on a smaller time frame. But this is a retracement within the start of a new short-term downtrend. So another tool that we can use is the Fibonacci fan. And a Fibonacci fan is basically another type of Fibonacci tool that you would apply to that same impulse move in the market. Now, the fan is useful for helping us identify kind of time placement on a continuation. So when you have a retracement and a correction in the market, the fan can come and play to help you kind of avoid a lot of the earlier triggers where it might not be quite ready for a trade. So for example, this one pulled up to, we got our 38.2% right here. Let me clear this. 38.2%. So you can see it reacted off of that level, but it really just paused it. It kind of fell in between here, between this support here and then the 38.2, and then it broke. Continued higher into that 61.8, and it pulled down back into that 38.2, but bounced one more time into that 76.4. So I like to look for these retracements that are falling, at 61.8, but 76.4 is really my favorite because you'll tend to have the least chance of getting in too early. Obviously, when you're timing your trades, you're looking at many, many different things. Fibonacci is not just a one-off. You can't just look at Fibonacci and expect your trades to miraculously do well. It's just another confirmation tool that's going to make sure that your market timing is really spot on. So, of course, using things like trend development, understanding the concept of a two-wave correction, understanding momentum, and how momentum shifts play into a trade. These are all really important as well. And of course, that's other topics for another day. But getting back to this Fibonacci, basically what you're now looking at this point here is a convergence. So we now have not only the retracement taking place and hitting resistance at that 71.8, but we also have that 76.4% level with the Fibonacci fan as well. And this convergence between using the retracement levels and the fan levels is going to be really important to help you with your timing. So when you're talking about combining Fibonacci levels, these are the two that I teach most often, and I really focus on a lot with my students because they are the levels that will help you perfect your market timing. So if you're finding you're constantly getting in too early or you're waiting too long on your trades, these are two of the most important tools to help you with improving those things. So obviously, when we look at Fibonacci, we can also use it for timing targets. I mentioned a little bit earlier a tool called a Fibonacci extension tool, and we're going to get into that here. So the very basic concept when you're looking at continuation strategies is that when you have momentum, meaning the rate of change in a price action, if your momentum on that continuation strategy starts out comparably compared to the previous impulse move going into the correction, then there's a really high probability chance that you're going to be looking at a target level of an equal or measured move. Now, if momentum is shifting, you can also use Fibonacci to help identify closer as well as further target levels. I've given classes specifically on using Fibonacci extension in the past. But we're going to stick to the basics here because I really want to focus upon combining the tools for today's session. So when we look at using the Fibonacci extension levels, we are going to be looking at a 3-point Fibonacci tool. So the previous tools were relying upon 2 price points. We were looking at just this original impulse move on the downside. Now the Fibonacci extension, on the other hand, has 3 pivot points that we are looking at. We're using not only the original high and then the low, so we'll go A, B, but then we're also using the high of the correction. Now, this is where we can start to get price points for target levels. So targeting on this, since the momentum here is pretty comparable coming out of the second wave, there's a really good shot that we're going to get an equal or measured move on the continuation of that trade. That means we'd be looking for a target level that is comparable to this original drop. What you'll notice here is that this fell into the 76.4 Fibonacci extension level first, and it paused there. That is pretty typical because many times within a trend move, even these impulse moves, you'll often see two waves. So we had two waves within this original impulse move here. So it's pretty normal that you would also see two waves on the continuation. In fact, when you're looking at target levels, you can even use just that second wave in the original impulse move to give you an idea of where your original target level might be, where you can first expect to see maybe a pause or something that might slow the move to start with. And this is really useful if you're building confidence in a system and you're looking for levels that you can protect part of your trade that makes sense, where you might get a reaction off of that support or resistance. So looking at the smaller segments within a larger impulse move can really help you do that as well. You'll notice that this hit almost exactly that 100% extension because the momentum on the continuation was also almost exactly the same. So it allowed for really, really close targeting on this one. Now let's go forward and look at another example. So this is another example that we were looking at during my market timing boot camp that I did a couple of months ago. And we were looking at a target level on Tesla. Now, I was actually day trading this, but we pulled it up and discussed it as a swing trading target as well. And here's the chart during the class. Here's just a screenshot of it. And we were looking at drawing the Fibonacci extension levels. And what I want to show you here is a variation on the Fibonacci extension, because what you're going to notice on this one is that I used this impulse move right here from 1 to 2 as my first 2 points on the Fibonacci extension. I didn't use that absolute low there. The reasoning is because when it hit this point here at 2, and I'll actually change my color here, right here, that's where momentum began to shift, meaning that's where we started to see a reaction off of a support level. And we actually had a smaller momentum strategy take place on the intraday charts at that point. So we were really looking at 3 pivot lows here on the smaller time frame, the 30-minute and the 60-minute time frame. So it's really important sometimes that to drop down to the smaller time frame and make sure you're really looking at that first impulse move. And if you have things that are retesting lows, maybe hitting slightly lower lows, those pivots for those slightly lower lows might not be as important. Now, even if you did, like if you're a newer trader, you're trying to figure out, okay, is it right to use this low or not? Even if you went from this high to this low, a lot of times the level that it would give you here that would be 100% if you did how I drew it would be 76.4% if you went from here to here. So you'll still see a support level most of the times. It's usually going to be the 76.4% though, if you had this momentum shift here first. So that's where people can get a little bit confused because they'll say, well, I was looking for 100% extension, meaning I was looking for exactly a measured move on the continuation. Why didn't it give it? The momentum was the same, so why didn't it hit that 100%? And it's usually because they didn't draw their point 2 at the right place. So if we go and look at this, how it followed through the next couple of days, you can see that it continued and hit perfectly right at that target level that we were looking at several days earlier. And the trade was actually a continuation of this breakdown. It was an intraday trade, but we were just looking at, okay, what the potential would be as a swing trade. Now, of course, Tesla, as you guys know, continued to break down a few days later, thanks to some lovely news that the market didn't take well. But in many cases, you're not going to have that news that's going to, get this turning back around later on. It'll hold that level, and it might hold it for quite a while before it tries to break it again. So what we're looking at here is how to use these Fibonacci levels to time the best targets most of the time. There's always going to be exceptions. And, Tesla with news, how it followed through several days later was one of those exceptions. But what you'll notice, though, is that it still held that support perfectly the first time it hits. And that is what is really important for us, because when we're looking at trades, particularly with how I trade, I'm looking to trade these main impulse moves. And unless I'm doing a position trade, I'm not interested in holding through a correction on a daily time frame that could be a month or two before it continues. I want something where I have more immediate follow through, and if there's going to be a correction, I only want it to be a couple of days before it continues the move. Now, different traders have different objectives. Your objective has to be based upon the time frame that you took the trade on, that you saw the trade. You can always take entries on smaller time frames, like that intraday trade that triggered on here on Tesla, but make sure that your target is in line with what you were actually seeing when you entered the trade, what first caught your attention. Otherwise, that's where traders end up getting out too early because they drop down to smaller time frames and lose focus upon the larger time frame strategy that they saw, or they think, oh, maybe this has a little bit more to it. They see larger time frame potential, but then they lose track of the fact that, okay, but that means that you're going to have to hold through a correction, and then they get shaken out on the correction. So this brings us into today. So the advantage of today's trades are that I took screenshots at all of the places that I had entries and exits, as well as levels that I knew that we would have a reaction to. So we are going to look at this example here of another momentum reversal. So this one is a little bit of a variation, kind of like what we saw in the last momentum reversal, but not all momentum reversals are exactly the same. In this case, we had a three-wave trend to the upside, a little smaller type of momentum shift over here with a nice little two-wave correction, and then we went into a little bit of a more traditional looking momentum reversal where we had the upside move, the little kneecap, and the secondary move, and then the shift, 3 evenly spaced highs. So this caught my attention on a larger time frame, and I dropped down to the 200 tick chart for actual timing it, because the 200 tick chart allowed me to see the back and forth waves. What I saw in the larger time frame looked a lot like this. It was pretty sloppy. You couldn't see the back and forth movement. So when you see the shift in momentum on one time frame, and hold on, and you think, okay, well, this is showing that momentum is starting to change. That's where you start to drop down to a smaller time frame for timing your entries. But you want to keep in mind that larger time frame for your target levels. So here's the screenshot when the trade triggered. And I dropped down and was using an even smaller one just to look at. Basically, you'll notice this has a two-wave move back into this third high. So two-wave moves within a momentum reversal are very, very typical, meaning I often look for two waves down, two waves up, two waves down. And then when I see two waves back up, I look for things like measured impulse moves for timing the trade. And that allows me to get into a trade earlier than a lot of traders might do, because the traditional entry that I teach for a momentum reversal is to take this channel and take a break of that channel as the trigger. You'll notice, of course, here that my entry was a little bit earlier than that. Does that mean that I got too excited to take the trade and I was jumping on the trade? No, I had a very technical reason for doing so. And that had to do with looking at the smaller channel on an even smaller time frame. It allowed me to take a trade that had similar risk to it, but a smaller level for a stop. Now, on the continuation for this, let's look at how this continued to play out. So first of all, I have a screenshot here that I grabbed at the first level of support where I took partials off on this trade. Now, this is where we were using the Fibonacci fan. Now, you'll notice something a little bit different about this Fibonacci fan is that I didn't go from the entire low again to the entire high. I looked at that first initial impulse move and that first trend. So some trends will have 2 waves and some trends will have 3. This one over here, for example, is a 2-wave trend. This one has a 3-wave trend. So by understanding trend development, I knew that I needed to use from this low to this high to give me my Fibonacci fan. Now, in this case, the 76.4% level wasn't a level to get into a trade for a reversal simply because the momentum was increasing on the downside, but it was a good level to look for as a place that we could see a bounce in the market. So that gave me the initial level that I took some partials on. And I'm going to show you another chart here. This shows the Fibonacci retracement. Now with the Fibonacci retracement, you'll notice that I drew things a little bit differently again. And that's because when I'm looking at a momentum reversal, I am using the low of the Fibonacci, or sorry, the low of the original impulse move to that first high where momentum begins to shift between the 3 highs. So this is where we're getting into some of that intermediate to advanced levels. So Fibonacci, you've got your very basic things to learn, but there's also some specific things to learn based upon how strategies are being applied. So when you're using, for example, a momentum reversal, this is how you would add those Fibonacci retracements as well as the Fibonacci extensions. This goes right back to that chart that I showed you guys earlier. Let me even scroll back here and show you that one. It's right here. You'll notice the exact same thing. I used this high to this low for adding that Fibonacci extension. And that's also the same low that I would use for Fibonacci retracement, meaning if I was looking at just this level to this level and then looking at where this retraced to, that is how I draw that particular type of Fibonacci level. And this is where a lot of newer traders, they get lost on because they are not adjusting due to that little shift in momentum that takes place after the main impulse move. Now, let's go back to that trade here today. And you'll notice that we have a nice retracement right into 50% level. And so here was that move that also corresponded to the fan right here. And again, another really nice convergence. So this basically just confirmed that this is a level where I could expect some sort of reaction. So if now it depends upon the type of trader you are, how you treat this trade. Some traders are just scalpers and they would just want to take, this initial move, get off at this level, look for maybe something a little bit later on. So in this one, I was looking for something a little bit more substantial out of it. So I still had part of the position. This screenshot here is where I added back into the position. Now, the reason that I added at this level had to do with several things. So first of all, we had, continuing to bounce back and forth between these Fibonacci retracement levels. So this is the 23.6 here. There was a momentum shift into that resistance, and there was also a little 2-wave correction here. So that on the smaller time frame offered another really smaller time frame strategy there. And it's also, of course, that 61.8% fan zone as well. So a lot of things were coming together here at this point. And I also had another picture that I took a screenshot right as it was hitting this level too. But I seem to have now left it out of this slideshow. So that's the entry screenshot. And then here is another one showing another use of the Fibonacci fan. So when we were looking at that previous slide here, we had the support coming off that 50% retracement and the 76.4% fan based upon this uptrend. And then we also had resistance from those same two levels, but as well as that 76.4% fan based upon this downtrend. And that's this downtrend right here that I'm talking about. Let me clear it. Right there. So that is this move here. And basically, you've got three things all working together for that as another continuation move at that point. So it doesn't really break that. You can kind of see the two-wave correction a little bit better here. The two-wave correction means that you're looking at one wave up, two waves up after it pulls off of the resistance. So basically, it's that little avalanche triggers the continuation right in there on the smaller time frame, and that offers the additional move on the downside. So this brings us into the next point. Now, I didn't do anything at this level, but for some traders, this would be a level that if you were, being a little bit more cautious, maybe looking to build your confidence in the trade, this is the level that you would take off part of your position again. Meaning, here was the continuation move. Here was the original trade. Here was the original support. There was that resistance we were looking at. And here's the first support level. This is basically just support from previous price levels. But I want to show you guys here how we had some additional confirmation with Fibonacci support. So this was also a 71.8% Fibonacci extension based upon that last little level within this larger impulse move. Again, you can use that smaller impulse move within the larger impulse move to identify some of the initial support levels. And of course, it's also still that 50% level. Now, the reason that this holds again right here is we've got these V's back and forth where it has this, it comes down into this low, it bounces, and then you basically have similar momentum back and forth. And so that means that previous levels of support will usually see some sort of reaction. So when you're looking at things where you're expecting like a two-wave move, like up here, since you have a two-wave move within this original impulse move, if you're looking at the continuation, then it's reasonable to expect that that's a good level that you might see that pause before you get another continuation. So this screenshot is where I would have added on to the position if I had, taken anything off at an earlier level, or maybe if you were late and wanted to get into a newer scalp. So I grabbed a screenshot of that because it's also a little two-wave correction, right scrunched in between these Fibonacci support and resistance levels. So there's many ways that you can trade these moves. I just want to show you guys some of them that I did, as well as alternatives that you could have also done, just based upon what your what your strategies are like, what your comfort levels are, experience levels as well. Since this is a 200 tick chart, for some people it might be too small. But if this was on a daily time frame, then this would be awesome for most traders because you can get a really nice continuation of that. So the next one going forward is the screenshot of where I exited this trade. So what you'll notice is that the exit was a little bit shy of the 100% extension, but I was using that 100% extension as my target level. And when I have an order on the books, I have it just above that absolute 100% extension because I want to get filled as it's coming into the support. I don't want to be fighting with everybody else once it's already hit. So if the momentum is the same going into that support as it was going into, the original support before the continuation, then I'm not going to do anything with adjusting my target on that. I'm going to show you here in a minute how you can adjust it further. But in many cases, this is exactly what I would do. And here is also a measured move as well. All right, so here shows the details on that trade. Original entry, partials, added back onto the position, took the remainder off the position. And at that same time, as we saw that extension, you'll notice that when you go and add the larger extension, not just looking at the smaller one where we had 100% right here, but also looking at the larger one, it's also the 76.4% for the larger move. And it is also the 76.4% Fibonacci fan based upon the entire trend. So just some additional confirmation. And here's where I was getting interested in this as a potential to re-enter the trade. So I stepped out here for a few minutes, came back. I was like, oh, you know what? This kind of looks interesting again still. Looked at the larger time frames still looked like they had more potential. Realized, you know what? I probably underestimated this trade originally and should have held a little bit of it for the continuation of the move. So let's show you what I ended up doing. So originally that momentum was pretty strong coming off this support, but it was a nice two-wave move in there, 38.2% as a retracement of a larger trend, and back into that 61.8% level. So the continuation, I didn't take it right off the high because I didn't like how that momentum was still so strong. I waited for this little avalanche here for the continuation. So the arrow shows where that is. Now here is where we started to get some original support. And basically what I was just looking at there wasn't so much the Fibonacci levels. It was, again, because of the V here, the inverse V. So just like over here, where I expected support again right there, that same idea was at play here. Now, it hit it pretty fast. When momentum is really strong into a support level, you'll usually get a bit of a retest of that level. So that's what we got here. So I was able to get a little bit more out of it. And going forward, I want to show you guys, this is basically kind of the now or never point for that second trade. Meaning, at this point, we had strong momentum on the downside here, and then we had a shift in momentum. If you look at this first low, the second low, and then where we're getting this action right here, you'll notice these are really evenly spaced, meaning this is either going to break here or it's going to reverse there. Hence the reason for taking partials in here, because it was coming into that zone of the lower channel. Now, I took that slide here because this is where I get very diligent at watching what is going on in the smaller time frames. I want this to break here, like within a couple of bars. If it doesn't, and the spacing ends up being more than between these first two lows, then that tells me I'm really looking at something where it's going to be bouncing back up into there. And it's going to be treating this like a momentum reversal on the upside. So this is really the do or die point on this particular trade. Hence the screenshot. And as you can see, it went, and it went really quickly. I didn't actually grab the exit screenshot on this one, but I want to show you guys what I was looking at. So originally, I was expecting the 100% right here. Now, I got more than the 100% on this one, and the reason was because when it came into this 100% level, notice again, momentum is kind of increasing here. So when we look at this move right here, and then this move right here, the momentum is a lot stronger. So that tells me my odds of getting more on the trade have now increased. If you go back here where it went into that first low, when you drew the Fibonacci extension, first high here, first low, there was a shift in momentum here. It slowed down when it went into that low. There was no slowdown the second time around. It hit it really hard. So that meant that there was a pretty good chance that it was going to continue. And it actually had a pretty flat base here on the smaller time frames. So that meant in addition to getting one continuation, there was a better chance of getting two. And I'm going to show you that smaller time frame here just so that you guys can see that better and what I was looking at. Oops, I thought I grabbed it. Oh, come on. All right, hold on. I do have a chart of it. Let me pull it up here for you. And so you guys can kind of see it here where, let's see here. I'll actually pull it up at the end in case it takes me a minute to grab it. But you can kind of see here's an initial pause, a secondary pause, and then a third pause. And these were all evenly spaced as well. So on the smaller time frame, it was looking a bit like a version of momentum reversal, except we didn't have a shift in momentum, which is what allowed it to retest these lows here. But that's basically what we're looking at. And again, after class, I'll go back and pull up that slide for you guys so that you can see that in more detail there. So going forward, here's basically the follow through on this entire move. So what you can see ended up happening was that the original trade ended up being basically the first impulse move, and then the second trade was the continuation where we had a second impulse move. So entry one was here, partials, added onto it, took the exit, entered it again. Again, probably should have held it, but you know what? Didn't. So always willing to get back into something if it still looks good. So here took partials as it was coming into that lower channel, and also due to that inverse V, here's that do or die point where if it held there, I was going to bail on it. And then here was the final exit. So you can see how those Fibonacci tools really played a great role with helping with the timing on these. And even going forward, they continue to offer another setup later in the day. So here, I was like, oh, you know what? This is starting to look interesting again. It wasn't quite a momentum reversal because here's a little bit of a pause here. Here was a bit of a pullback. It wasn't like that great V back and forth action, but it was starting to shift momentum, coming right into that key 76.4% zone. So I'm like, hey, you know what? It's not quite perfect yet, but let's see what happens with this. And it ended up pulling up a little bit above it and triggering this small little head and shoulders on the smaller time frame. So here you can see it coming into the first support and continuing. Again, you can see how the Fibonacci levels really play a role in where these support levels are hitting. So this is a Fibonacci retracement, and it's just based upon this entire larger one that I just kept on the charts from earlier. So I was using it to help identify levels of resistance. And then, of course, we had that 76.4% Fibonacci fan-in to come into play. But what's really interesting with Fibonacci is that you can leave things on your charts and they will continue to be vital going forward. So here, for example, you guys, I drew this Fibonacci level on a trade that I had over a week ago. And look at it, you know, it's continuing to hold these points like perfectly. And this is from a trade based upon this move back there. And it continued to hold well into today. So it's really interesting, you know, how you can continue to use the different support and resistance levels going forward. Let's go here. I know we're kind of running a little low on time here. So I want to show you guys what we've got coming up this week. So I have a boot camp that is kicking off tomorrow, and I know a lot of you are already joining me for it. It's not too late for you to join in if you haven't signed up already. And we're going to be focusing purely upon trade management during this boot camp. So it is 4 weeks. It is on Wednesdays from 10 to noon over the next 4 weeks from December 13th to January 3rd. So it is over the holiday season, but every single session is recorded. So you can go back and study it anytime. Your access to it is indefinite, meaning you can go back anytime in the future and go back and study it. And it also comes with a free 30-minute private mentoring session with me, which we do on GoToMeeting, so that I see your charts, you see my charts, we talk, we record it. We are going to be covering, again, 4 weeks of live training. We're going to be looking at everything from when and how to enter a trade. So I showed you a little bit of that here today. When and how to add on to a position. Again, I showed you some of that today. When and how to adjust stops, including trailing stops. Didn't really get into that today. And when and how to protect your gains. So I showed you a little bit of a preview of some of those tools today. And also managing a trade astrophy. So this means like when something unexpected happens, like news, when that comes out, how do you manage the trade? You know, especially if maybe it closes at one price point, opens up at a level way past your stop the next day. What do you do? And there's techniques that you can use to actually minimize your loss on such trades. Gets into a little bit more advanced trade management there, but I'm going to show you guys what to do on that. And we actually have an entire full day session devoted to how you manage a trade that for whatever reason, maybe you missed a stop, maybe you took too many shares or too many contracts. Maybe your entry was too early, your entry was too late. We'll be looking at all of those scenarios. So you can sign up for the bootcamp. It is at tonihansen.com/manage. And it is $197 for the entire 4 weeks, plus that 30-minute mentoring as well. So you'll have that 31-minute mentoring. A little bit, show you guys something from last week. I know if you guys made it to one of the webinars last week, this was just another variation of a momentum reversal. This was again on the euro dollar. And it was a momentum reversal off of the lows, those 3 evenly spaced lows. We'll be looking at a lot of different strategies over the next month, not just momentum reversals, but also just continuations of those strategies and a number of other types as well. Just use momentum reversals primarily here and the continuations, just because it's some of the easiest strategies that you can use for newer traders, because it's really step by step. You can't mess them up too much. That trade, you can see timing, even with the momentum reversal on entry, can be done using the Fibonacci fans as well. So again, the retracement levels are important. Here's the 71.8. That helped stall this two-wave correction off of the highs, but it didn't quite reverse it. It helped when it got into the 76.4. So 76.4 is really my favorite Fibonacci fan retracement because that has the best chance of really kicking off that reversal. But the other levels will also still get reactions off of them. And then again, with the timing for target levels, you'll notice that when I added the Fibonacci retracement tool, I went from the high of this impulse move to the low of this impulse move, not the absolute low before it started to take off. I used the low before that momentum shift took place. Again, very, very, very much key here. So you can take part in this boot camp coming up starting tomorrow for $197, and that's going to be, let's see, we've got 8 to 9 hours of live training that we will be doing, plus 30 minutes of one-on-one. most of the sessions for private mentoring for the follow-up are now being timed out into January. So if you want to get onto those, as early as possible, make sure you sign up as soon as possible, because I do go in order of, who signs up first gets kind of first shot at the one-on-one sessions. A lot of people are just waiting to do it after the boot camp as well, so that they can look at, add some of what they're learning in the boot camp to their own trades. So again, take advantage of that at tonihansen.com/manage. And all sessions, once again, are recorded, as is today's session. So you will be able to pick up your copy of today's session here within 24 hours. I will be sending that over to them tonight, and they will have a page up in the morning for you guys. Let me answer just a couple of questions here before we wrap up for the evening, and then I'm going to take off to do some of my prep work for tomorrow. What methods do you use to measure momentum? So there are a couple of things. So basically, looking at impulse moves is a really good way to get started, because when you're looking at like the back and forth movements within a trend, these major impulse moves where you get these V's, this will basically be an average to above average momentum move. So when I'm comparing, momentum following those type of V's, I'm comparing them to those V type of pivots. And if a correction is slower than the momentum within those V's, then I'm considering that to be slower than average. If it's faster than a typical V, I'm considering it to be above average. So I do use that visual tool. I do use some Fibonacci time extensions as well within the market for some of the analysis. And of course, looking at how long they're taking to retrace to some of those Fibonacci retracement levels is really important as well. Mark asked, do I use stop losses in all my trades? Absolutely, yes. That doesn't mean I'm not going to change where those stops are going to be, but that gets into some of the more advanced trade management. I will be covering some of that advanced trade management over the next couple of weeks. So sometimes I will have a stop on a trade at one level, and I will change that stop as the trade progresses. But I do it where I'm not going to be severely impacting what my risk is on the trade. Meaning there's some cases that I might take a position that is twice as large as I normally would, but I'm doing it on a strategy that might be like 95% accurate. So there's usually really, really good reasons for doing so. And also some of the times I might have to shift, like maybe let's say I have 10 contracts of something, and as the trade is progressing, I know that that stop level is no longer looking like the best stop level, and it might try to test it a little bit further. So then I'll lighten up on the trade. And I'll show you guys, some of those levels where you can do that and really still get a really good outcome on the trade. Mark, so, where do some of these Fibonacci levels come from? If you go to tonihansen.com and go under the courses, let's see here. Let me actually pull up that link for you. I've got a class in there, a couple of webinars here that go into the details on where those Fibonacci numbers are coming from. I've got bells going off here in my ears. Let's see here. Let me find the link. Okay, so I'm going to post this to all of you guys. And if you look on the right-hand side of that page, you're going to see two free videos, preview videos. Well, there's one, and then there's an email for the second one. And that's going to give you some of the information on I think they might be on my YouTube as well. I'll have to go and double check on that one. But that's where you can find some more information on the different Fibonacci levels, where they come from, the history of Fibonacci, that sort of thing. All right, guys, it is time to wrap up for tonight. So I'm glad that you guys made it here this evening, and I will get that video here converted as soon as possible so that they can get that up to you guys ASAP in the morning. All right, everyone, I will see a lot of you guys back here tomorrow, and the rest of you have a great remainder of your week. Good night, everyone.